Hello everyone, welcome to this 7th series video on CA Foundation examination preparation for Jan 2025. And in today's video, we're going to discuss true or false questions from the last 6 attempts to ensure that you seize those 12 marks in Jan 2025 examination. And we're going to do this exactly in the pattern of Who Wants to Be the Millionaire, or what we call as our KBC style. So let's get started with September 2024 paper, and we have with us question number 1. Before I go there, all I want you to do is start writing all the answers to all the questions in your paper alongside. If you're watching this, please pause this, grab a piece of paper and pen. For every question that I show, write your answer 1A, 1B, 1C, whatever, true or false on your paper, and give yourself marks and comment to this video and tell me how many marks have you got at the end of the video. Let's go. Start with question number 1 from our September 2024 paper for true or false. Question number 1 is nominal accounts are balanced at the end of the accounting year. Is it true or false? I hope you've written your answer. Let's see the answer. Answer is false. Nominal accounts are closed at the end of the year, not balanced, and their balance is transferred to trading or P&L account. On the other hand, real and personal accounts are balanced by carrying the balance from one accounting period to another accounting period. Let's now head into question number 2 from our September 2024 paper. Question number 2 on your screen now. Overall expenses of a second-hand machinery purchased are revenue expenditure. What do you tell this statement as? True or false? I hope you have written your reason. The answer is false. Overall expenditure incurred should be capitalized because it is the expenditure incurred before the asset is ready to be put to use. Any expenditure incurred till the time the asset is ready to be put to use is to be capitalized, and any expenditure incurred after that is to be treated as revenue. And overall expenditure is incurred once in a lifetime. It's going to add value to that asset. It's going to generate revenue for us in the future, and it is in fact material. Let's now head into question number 3 from our September 2024 paper. Question number 3 on your screen now. Valuation of inventory at cost or NRV is based on principle of conservatism. What do you have to say? Is this statement true or false? I hope you've written your answer. The answer is true. When we value the inventory, we do it as per cost or NRV, whichever is less, based on conservatism principle. However, the same is told to us by para 5 of accounting standard 2 also. Let's say I buy an inventory at rupees 100. If I sell it at 90, I'll make loss of 10. Let's say I have not sold it at 90, but I'm expecting to sell it at 90 and incur loss of 10. Though I have not sold it, though I have not made that loss of 10, because I might make that loss of 10 in the future when I sell, I have to anticipate that loss and then provide for it in my books of accounts by reducing the value of my inventory from 100 to 90, and that 10 is because of conservative principle that we follow. You would have ever read this in conventions also. Let's now head into question number 4 from September 2024 paper. Question number 4 on your screen now. A promissory note can be made payable to the bearer. What do you say? True or false? A promissory note can be made payable to the bearer. Did you write your answer? The answer is false. Promissory note has to be directed to a specific person. In our country, you can't give bearer promissory note. If it is a bill of exchange, it can be made payable to the person who has it or is ordered. But with regard to promissory note, it has to be to a specific person. If you are a promisor making promise to me, I become promisee. You become promisor. You are the maker, you are the payer. I have to be the payee. I can't give this document to somebody else and ask you to pay to them, because bearer promissory note in our country is the currency notes issued by RBI. So the only person in the country who can issue bearer promissory note is RBI and nobody else. So bill of exchange can be a negotiable instrument which can be directed to the holder, or holder can make an order to somebody, but promissory note has to be to a specific person and it cannot be bearer. Let's now head into question number 5 from our September 2024 paper. Question number 5 on your screen now. Receipts and payment account for NPO always follows accrual concept. What do you have to decide on this statement? Is it a true or is it a false? The answer is false. Receipts and payment account is made on cash system. Income and expenditure account is made on accrual system. We record all the receipts and all the payments, irrespective of the fact whether they belong to current year or not, in our receipts and payment account. However, in income and expenditure account, we write expenses and incomes what relate to the current period, though they are paid or not paid. So receipts and payment account, cash system, income and expenditure account, accrual basis. Let's now see the last question from our September 2024 paper. And question number 6 on your screen now. Legal heirs of a deceased partner are entitled to his capital balance only. What do you have to say on this? True or false? I'll repeat. Legal heirs of a deceased partner are entitled to his capital balance only. Is it a true or false? It's false, because the legal heirs of the deceased partner are not just entitled to capital balance. They are entitled to share in reserves, share in goodwill, profit till the date of death, interest on capital, salary or remuneration, and all the things that are attributable to the partner till the date of death has to be given to the legal heir and not just capital. By this, we have successfully completed entire September 2024 question paper with regard to true or false. Let's now start with the discussion of June 2024 question papers, true or false questions. And without wasting much time, let's straight away get into question number 1. Question number 1 on your screen now. If closing stock appears in trial balance, then it does not enter in trading account. It is shown only in the balance sheet. If closing stock appears in trial balance, it does not enter trading account. It is shown only and only in balance sheet. What's your answer? True or false? I hope you've written your answer. The answer is true, because whenever closing stock is to be taken into final accounts, it should basically not appear in trial balance but given in adjustments. The adjustments closing stock will be taken to trading account credit side to determine gross profit and balance sheet asset side to determine financial position. However, if you have to enter closing stock into trial balance, it should appear both debit and credit side, because it has not gone through double entry system. When we write debit and credit, it is pointless to write it. So we take the credit aspect of closing stock in trial balance, add it to opening stock and purchases, making our opening stock plus purchases minus closing stock cost of goods sold or adjusted purchases appear in trial balance. So that will get adjusted. Only debit aspect of closing stock will be appearing in trial balance. And such debit aspect of closing stock in trial balance is asset and it will be taken to balance sheet, and impact to trading account is given indirectly. If I have to tell it differently, closing stock should not appear in trial balance. Whenever it appears, we write only debit aspect of closing stock in trial balance. If closing stock is appearing as debit in trial balance, the credit aspect of closing stock is already deducted from purchases, meaning the purchases in the trial balance is not purchases now. It is opening stock plus purchase minus closing stock, which can be called as adjusted purchases or also called as cost of goods sold. This cost of goods sold, what will go to trading account, will give the impact of closing stock there. So we don't have to separately transfer closing stock all again. So closing stock appearing in trial balance will go only to balance sheet and not to trading account. In this case, this answer, I hope you got it right. Let's now go to question number 2 from our June 2024 paper. There you go, question number 2 on your screen now. If the amount is posted in the wrong account or it is written on the wrong side of the account, it is called as error of principal. What do you have to say on this? True or false? If the account is written wrongly or if the amount is written wrongly on the wrong side of the account, it is called error of commission and not error of principal. Hoping that you got this right, let's now head to question number 3 from your June 2024 paper. There's the question on your screen now. Accounting standards can override the statute. True or false? I hope you written your answer. Accounting standards can never override statute. What statute says will prevail over accounting standards. Hoping that you got this answer right, let's now head to question number 4 from your June 2024 examination paper. 4 on your screen now. Promissory note is different from bill of exchange because the amount is paid by the maker in the case of former and it is paid by the acceptor in the case of later. Did you write your answer? In the case of bill of exchange, I am the drawer and the seller. I sell the goods to you. I make an order. You accept. And the one who's accepting is drawee. One who's making the order is drawer. And as you have bought goods from me, as you accepted my order, you become the person who's supposed to pay money. So the one who accepted the order has to pay the money. I am drawer, you are drawee, you are payer, I am payee. In the case of promissory note, that's not the case. In the case of promissory note, you don't let me make the order. You make the promise by yourself. So you become the promiser. You become the maker. I become the promisee. Seller is the promisee. Buyer is the promiser and maker. You become payer. I become payee. So in the case of bill of exchange, I draft the document because it's an order accepted by you. You make the payment. In the case of promissory note, you make the document. You make the payment. So the answer is true. That's the point of difference between promissory note and bill of exchange. Let's now head to the last question. No, the 5th question from our June 2024 examination paper. The question is on your screen now. All the errors are rectified by means of journal entries. What do you have to say? True or false? I hope you've written your answer. Not all the errors are rectified by way of journal entries. If it is errors which are one-sided and identified before trial balance, they are rectified by way of adjustments. I'll repeat, if there are errors which are one-sided and are identified before trial balance, they are adjusted. We don't pass rectification entry for the same. If these are errors identified after trial balance, whether they are one-sided or two-sided, we'll always pass journal entries for the same. Let's see the last question from our June 2024 RTP, question number 6. Question number 6 on your screen now. Revaluation account is also known as profit and loss adjustment account. Revaluation account, what we prepare in partnership, admission, retirement, death. Is it also called as profit and loss adjustment account? The answer is true, because revaluation account help us find gains or losses, profits or losses, expenses or incomes arising in the process of revaluation of assets. And this will ultimately affect our partner's capital account only, but we prepare this to ensure that the impact is not passed through P&L account. So revaluation account helps us find the impact of revaluation of profits and losses, so revaluation of assets and liabilities, not through P&L but directly to capital. And by this we complete 6 questions from our June 2024 question paper. We'll now discuss December 2023 papers, true or false questions, and let's begin with question number 1 from our December 2023 examination question paper. Question number 1 on your screen now. Financial statements must disclose all relevant and reliable information in accordance with full disclosure principle. What's your answer? Is it true or false? I hope you made your mind and written your answer. The answer is true. As per convention of materiality, we have to disclose only material items in your financial statements. However, as per convention of full disclosure, you need to disclose all the relevant and reliable information in your financial statements. Going ahead to question number 2 from our December 2023 question paper. Question number 2 on your screen now. The gain from the sale of capital assets is added to revenue to ascertain the net profit of the business. Is your answer true or false? Gain from the sale of capital assets is added to revenue to ascertain the net profit of the business. I hope you made your mind and also written the answer. The answer is true. The money received on the sale of a capital asset is capital receipt. I agree. It is not a revenue receipt. However, for determining your profit and loss, this capital profit will also be included. So this will go to P&L account only ultimately. The profit or the receipt on sale of a capital asset is capital receipt, but considered in determination of our profit. Let's now go to question number 3 from your December 2023 examination. Question number 3 on your screen now. Depreciation is non-cash, that's not E, that's H, non-cash and non-operating expense, which is to be provided for if there are profits. It is non-cash expenditure, non-operating expenditure, which will be provided if you have profits. What's your answer? Is it true or false? I hope you made your mind and already typed or written your answer there in the paper. The answer to this question is false, because you have to provide for depreciation irrespective of the fact whether there are profits or losses in your P&L. It is non-cash expense, but it is a mandatory expenditure. It is not an optional expenditure written in the case of profits only. Let's go to question number 4 from our December 2023 exam paper. 4 on your screen now. Sum of your digits method is an example of accelerated method of charging depreciation. Sum of your digits method is an example of accelerated method of charging depreciation. True or false? I hope you made your mind. Let me tell you the answer. Under sum of your digits method, we actually charge depreciation in an accelerated form. The answer is true, because if in case the depreciation has to be booked more because the utilization of the asset has become more, then under sum of your digits method, what we do is we write it in the proportion, no, sorry, not production units, in sum of your digits method, we write it in that increasing form. Excessive depreciation in earlier years, lesser depreciation in later years. We take n into n plus 1 by 2 as the total sum of your digits. We write the remaining useful life in the numerator and sum of your digits in the denominator. For example, if you're doing it for 5, 5 plus 1, 6, 6 into 5, 30, 30 by 2, 15. For the first year, we multiply the cost of the asset less scrap value into 5 by 15. For the second year, 4 by 15. For the third year, 3 by 15. For the fourth year, 2 by 15. And for the last year, 1 by 15. By doing this, we are charging accelerated more depreciation in the earlier years, lesser depreciation in the later years. Not exactly like WDV, much more accelerated than WDV. Let's now head into question number 5 from December 2023 exam paper. Question number 5 on your screen now. Inauguration expenses of rupees 10 lakhs incurred on the new unit in an existing business is a capital expenditure. True or false? Inauguration expenditure might increase the number of customers that comes into our business, but not for a very long time. So this expenditure is revenue in nature. It's not going to give you future economic benefit. It has to be written to P&L account in the very first year. It has to be written off in the first year. You cannot defer it. So it is not capital expenditure. It is to be treated as revenue expense. Are you ready for the last question from your December 23 paper? Question number 6 on your screen now. Discount column of cash book records the trade discount. True or false? Let me repeat. Discount column of the cash book records trade discount. True or false? The answer is false. Discount column records only cash discount. Trade discount is not accounted. It is adjusted against the selling price. Discount given at the time of trade is trade discount. Discount given at the time of settlement is cash discount. And in the cash book, we write cash settlement, amount received, amount paid. There, if there is any discount, it will be recorded in the discount column of cash book. Let's now call it an end for our December 2023 question papers true or false discussion. Let's now begin with June 2023 examination question paper discussion for true or false questions. And question number 1 is on your screen now. As per the concept of conservatism, the accountant should provide for all the possible losses but should not anticipate income. What's your answer? I hope you're writing it down on the paper. The correct answer is true. As per the convention of conservatism, we should account only for anticipated expenses and losses, but not for anticipated incomes and gains. Let's go to question number 2. There you go. Question number 2 on your screen now. Expenses in connection with obtaining a license for running a cinema hall are revenue expenditure. Expenses in relation to obtaining a license for cinema hall is revenue expenditure. Am I right or wrong when I tell this statement? Is it true or false? I hope you written your answer. The answer is false. Any expenditure incurred for obtaining license is the primary expense. Without obtaining the license, you can't run the business. So such license fee has to be capitalized and it has to be amortized over the useful life of that license period. So basically it is a capital expenditure and it is not revenue expense. Shall we now go to question number 2? Sorry, question number 3 on your screen now. Under or overcasting of a subsidiary book is an example of error of commission. Under or overcasting of subsidiary book is an example of error of commission. Did you write your answer? The answer is true. Writing more amount or less amount or writing in the wrong account is an error of commission. And I hope a lot of you have got the answer right. Shall we now head to question number 4? Question number 4 is here. So this question was on consignment and we have successfully removed it because it's removed from the syllabus by ICI. So let's go to question number 5 now. Question number 5 on your screen now. Perpetual debentures are payable at the time of liquidation of the company. Perpetual debentures are payable at the time of liquidation of the company. Did you write your answer? The answer is true. Perpetual debentures are debentures which are not redeemed during the lifetime of the business. This will be redeemed at the end of the business. Last day. On the liquidation, we pay money to these debenture holders. However, the provisions relating to these perpetual debentures have been withdrawn, and as per Companies Act 2013, you can no longer issue these debentures. Let's go to the last question from your June 2023 question paper. Question number 6. Overhead is defined as the total cost of direct material, direct wages, and direct expenses. Overhead is defined as total cost of direct material, direct labor, direct wages, and direct expenses. Did you write your answer? The answer is false. Overhead is indirect material, indirect wages, and indirect expenses, and not direct material, direct labor, direct expenses. So I hope you have also understood this discussion of June 2023 question papers, true or false questions. We're now starting to discuss solutions to true or false questions from our November 2023 examination. Question number 1 on your screen now. Financial statements are not prepared on the assumption that an enterprise is a going concern and will continue its operations for the foreseeable future. What's your answer? Please write it on the paper before I disclose the right answer to you. Financial statements are not prepared on the assumption that an enterprise is a going concern and will continue its operations for the foreseeable future. The answer is false. Going concern concept is the fundamental accounting assumption based on which financial statements are prepared. And going concern concept says that the fundamental assumption when we are preparing financial statement is that the organization has an intention to continue the business for foreseeable future. And it has no situation because of which it has to shut down its business in the very near time. By this, we're done with first question. Let's now head into question number 2 from November 2023 question paper. Question number 2 on your screen now. Periodic inventory system is a method of ascertaining inventory by taking an actual physical count. What do you have to say? True or false? Periodic inventory system is a method of ascertaining inventory by taking an actual physical count. The correct answer is true, because under perpetual system we maintain proper stock records. Under periodic system we rely upon physical counting of the inventory to identify the valuation of your inventory. Under perpetual system we maintain detailed stock records. Under periodic system we do physical counting to arrive at the value of inventory. Let's now head to question number 3 from our November 2023 question paper. Question number 3 on your screen now. The provision for discount on creditors is often not provided in keeping with principle of conservatism. We don't provide for discount on creditors keeping in mind conservatism. What do you have to say? True or false? The correct answer to this question is true. Sorry, I had to see a message. The correct answer to this question is true. We don't have to provide for discount on creditors. See, if there are debtors, against these debtors, if there is going to be delay in collection, or you might expect them not to pay, and you offer them discount, such amount of discount is discount allowed, and discount allowed is an expense. When discount allowed is an expense, expected expense, we create provision, we record it based on conservatism. However, the creditor, the person to whom you are supposed to pay money, if you have to pay something slightly lesser, that amount what you don't have to pay them, you will not expect it, anticipate it and record. You will wait for it. In reality, if it actually becomes a day where you don't have to pay, you will record it on that day. This is based on the concept of or convention of conservatism. Let's now go to question number 4 from November 2023 question paper. Question number 4 on your screen now. If the errors are detected after preparing trial balance, then all the errors are rectified through suspense account. If errors are detected after preparing trial balance, then all the errors are rectified through suspense account. What do you have to say? True or false? If the errors are identified after trial balance, not all the errors have to be identified and rectified through suspense account. If there are two-sided errors, error of complete omission and error of principal, then we might rectify this error without using suspense account. Only one-sided errors will lead to mismatch of trial balance and creation of suspense, and only these one-sided errors rectified after trial balance need suspense account in rectification, not all the errors. By this, we are done with question number 4. Shall we now head into question number 5 from our November 2023 examination paper? Both revenue and capital nature transactions are recorded in receipts and payment account. Both revenue as well as capital nature transactions are recorded in receipts and payment account. What's your answer? The correct answer is true. Whether it is revenue or it is capital, whether it is expense or it is income, whether it is inflow or it is outflow, it is recorded in receipts and payment account till the times it's affecting cash. What we follow in receipts and payment account is cash system of accounting, not anything based on capital, revenue or accrual or not. So that's the answer for the 5th one. Let's now see the last question from our November 2023 question paper, question number 6. Question number 6 on your screen now. A fixed charge generally covers all the assets of the company, including the future one. A fixed charge generally covers all the assets of the company, including the future one. This is from company accounts on debentures. Introduction. Did you write your answer? The answer is false. Fixed charge is created not on all the assets but on specific assets. Fixed charge is on specific assets. However, if it is floating charge, then it will be on all the assets including the future ones. And by this we complete the discussion on November 2023 question papers, true or false questions. We're now discussing May 2022 question papers, true or false. The previous set of 6 was actually November 22. By mistake, I've told it as November 2023. I hope you stand that corrected. So, are you ready to start with this discussion of May 2022's true or false questions? We'll now see question number 1 from our May 2022 examinations, true or false questions. There you go. Question number 1 on your screen now. Claim that an enterprise is pursuing through legal process where the outcome is uncertain is a contingent liability. True or false? Claim that an enterprise is pursuing through legal process where the outcome is uncertain is a contingent liability. What's your answer? It is false. The claim against the company is contingent liability. If the claim is pursued by the company, it is because of their advantage and they have to receive something. That will stand as contingent asset. If the claim is on the company by someone else, contingent liability. If the claim is by the company on someone else, which the company is pursuing, it will become contingent asset and not contingent liability. Let's go to question number 2 from May 2022 question paper. Question number 2 on your screen now. At the end of the accounting year, all the nominal accounts of the ledger books are balanced. At the end of the accounting year, all the nominal accounts of the ledger book are balanced. What do you have to say on this? True or false? The answer is false. Nominal accounts are closed by transferring the balance to trading or P&L account. However, real and personal accounts are closed by balancing it forward to the next year. So, real and personal accounts are balanced, nominal accounts are closed. Let's go to question number 3 from your May 2022 exam question paper. Question number 3 on your screen now. The specific due date excludes the addition of grace days to the arrival of due date. It's saying that if the question mentions a specific due date, you don't have to add 3 grace days. Is the statement true? The answer is true. You add 3 grace days only if it is bill with specific period. In the bill, if you mention 30 days, 1 month, 2 months, 75 days, some period, then you add 3 grace days to that bill period to arrive at maturity date from due date. However, if the bill specifically mentions a date, that date all by itself is the due date, that date all by itself is the maturity date, and there is no concept of 3 grace days. And that's the answer to question number 3. We'll now head into question number 4 from our May 2022 question paper. Question number 4 on your screen now. An amount spent for replacement of worn out part of a machine is capital expenditure. An amount spent for replacement of worn out part of a machine is capital expenditure. What do you have to say? True or false? The answer is false. It's not capital. It is for maintenance. This is to be treated as revenue. We'll incur this expense again and again, multiple times. And this expense will go to P&L and it will not be added to the cost of the machine. Let's now go to question number 5 from our May 2022 question paper. Question number 5 on your screen now. Debenture suspense account appears on the liability side of the balance sheet of a company. Debenture suspense account appears on the liability side of the balance sheet of a company. What do you have to say? True or false? I hope you made your mind and also written the answer. Debenture suspense account arises whenever we have issued the shares as collateral security or debentures as collateral security. We'll credit the debentures and debit debenture suspense account. Debenture suspense account which is debited will appear as an asset, non-current asset in the balance sheet and not a liability. And I'll repeat the entry. Whenever debentures are issued as collateral security, we credit debentures and we debit debenture suspense account. Entry will be debenture suspense to X% debentures. Whenever this loan is closed, we will reverse this debentures which are issued as collateral security. For that, the entry will be debenture suspense account will be credited and debentures account will be debited. Debentures account debit to debenture suspense. If you have any doubts on these concepts of company accounts, you can go into our marathon revision video which is there in the same YouTube channel, and then watch that. You will get a lot of clarity on this topic. Or you can DM us, and then we'll provide you with much more lectures from the previous ones. We'll give you the more links to the lectures which is there from the past. And I hope you understood this fifth question. Let's now head into question number 6 from our May 2022 examination paper. Question number 6 on your screen now. If the errors are detected after preparing trial balance, then all the errors are rectified through suspense account. If the errors are detected after trial balance, then all the errors are rectified through suspense account. What do you have to say? I hope you made your mind and also wrote the answer. The answer is false. Not all the errors are rectified through suspense account. If these errors are two-sided errors or errors of complete omission, we will rectify them without bringing suspense account. Suspense account will come only if these were errors which were one-sided, which resulted in trial balance not tallying. Then the errors are rectified through suspense account. I hope you got May 2022 papers discussion as well. See you in the next one. Wait a second. Let's now discuss November 2021 examinations true or false questions. Are you ready? This is going to be the last one in this today's video. Let's now start with question number 1 from our November 2021 examination paper. Question number 1 on your screen now. Amount spent to minimize the working expense is revenue expenditure. Amount spent to minimize the working expense is revenue expense. True or false? The answer is false. The amount, if it is spent to reduce the working expenditure by substance, it is expected to be giving you long-term benefit. Because this expense gives you long-term benefit, we can call such an expenditure as capital expense. Let's go to question number 2 from our 2021 November examination paper. Question number 2 is here on your screen. Expenses incurred on the repairs for the first time on purchase of an old building are capital expense. I'll repeat. Expenses incurred on the repairs for the first time on the purchase of an old building are capital expenditure. True or false? The answer is true. Any expenditure incurred for the first time before the asset is put to use, till the time the asset is actually ready to be put to use, is to be capitalized. You would read this in your depreciation chapter also. We'll go ahead to read this in your CA Inter in Property, Plant and Equipment Accounting Standard 10. We'll be waiting very eagerly to teach you there. Let's go to question number 3. Question number 3 on your screen now. The provision for bad debts is debited to sundry debtors account. The provision for bad debts is debited to sundry debtors account. True or false? I hope you made your mind and also wrote the answer. The journal entry for provision for doubtful debts creation is P&L account debit to provision. It is expensed by debiting in P&L account, and credit will be provision amount which will not be deducted from, which will not be credited to sundry debtors, but it will be shown as a liability in the balance sheet. Alternatively, instead of showing it in the liability side of balance sheet, it can be deducted from the total debtors, but the deduction from total debtors is not like crediting debtors account. I'll repeat. Journal entry for provision is P&L account debit to provision. This P&L account debit aspect is expense in P&L. Provision, what you credited, is a liability in the balance sheet. Instead of showing it on the liability side, you can deduct it from the asset, but it is not credited to debtors account. I hope you got third one right. Let's now go to question number 4. Question number 4 from our November 2021 paper. I hope I'm right with that. Non-participating preference shares enjoy voting rights. True or false? I hope you made your mind and also wrote the answer. Non-participating preference shares means they participate only in the amount of profits that is mentioned, amount of dividend that is mentioned. Other than the dividend rate that is mentioned along with their name, they are not eligible for any extra dividend, and they never have voting rights in the company. Participating means they participate in the profits over and above the percentage mentioned. Again, they also don't have voting rights. Participating means over and above the percentage of dividend prescribed, they can also get additional dividend if the company makes enough profit. Non-participating means they won't get any additional dividend over and above the percentage mentioned. It has nothing to do with voting rights, and preferential shareholders have no voting rights. Let's now see question number 5 from the examination paper. Are you ready? Question number 5 on your screen now. This was a question from consignment which is now removed from syllabus, so we don't have to discuss this. So let's go to the last question in this video. There you go, question number 6 on your screen now. Discount column of cash book is never balanced. Discount column of the cash book is never balanced. What do you have to say on this? I hope you written your answer. The answer is true. Discount column is not balanced. We don't take the total on the debit side of cash book or cash account and credit side and then identify the balancing figure. We take the total on the receipt side or the debit side. We take the total on the payment side or the credit side, post them as it is to the respective ledger. Debit side represents what? It is receipts, so it is discount allowed. Credit side represents discount received. Discount received is income, which will go to P&L account credit side. Discount allowed is expense, which will go to P&L account debit side. We will never take net of those discount allowed and discount received. They'll be posted separately to P&L account, and that's the solution to question number 6. I have done about 6 question papers, true or false. I hope you guys have enjoyed this. Let me know in the comments how much did you like this little effort that I put in over few hours in the night to ensure this fact that you enjoy this journey of true or false questions discussion. We'll be coming out with another video tomorrow. And remember to keep studying for your January 2025 examinations and stay in the game.